Hello guys, so in this video we're going to talk about a major shakeup in the K-pop business world as HYBE has officially decided to sell off its entire stake in SM Entertainment. And the buyer is Tencent Music Entertainment, aka TME, which is China's biggest music streaming company. And this marks the end of a corporate rivalry that's been unfolding since 2023. And it may possibly signal a new chapter for both SM Entertainment and HYBE, as well as some interesting developments in K-pop's relationships with China. Okay, so let's break down what happened, why it matters, and what to watch next. So let's start with some context. Back in February 2023, HYBE acquired a 14.8% stake in SM Entertainment from SM's founder Lee So-man. This move kicked off a high-stakes takeover attempt. Now, HYBE didn't want to just invest. They wanted to control. They launched a public tender offer to buy another 25% of SM shares, which would have given them 40% total and effectively made them the controlling shareholder. But the takeover never materialized. Why? Because Kakao entered. SM's management, who was not thrilled with HYBE's approach, aligned with Kakao instead, which is a pretty powerful Korean tech and media giant. Kakao countered HYBE's offer with a higher per share price and eventually secured a controlling stake in SM. HYBE backed off from the acquisition by March 2023, citing concerns about market stability and potential harm to shareholder value. But they didn't walk away empty-handed though. They held on to a minority stake and started planning a more gradual exit. After the failed takeover, HYBE shifted gears. They had a big chunk of shares in a direct competitor and no real influence over how that company was being run. So they did what they should do, what smart companies do. They waited for the right time to sell. Over the next year and a half, HYBE gradually reduced its holdings. They sold off parts of their stake through block trades. Big private transactions that don't disrupt the regular stock market. And by May 2025, HYBE was down to just 9.38% of SM shares, and now they have decided to sell that last piece. Now, let's talk about the buyer one more time. Tencent Music Entertainment, or TME for short. The company behind QQ Music, Kugo, and QO and WeSing. There are a bunch of companies in China that they own, and TME is buying all 2.21 million of HYBE's remaining SM shares for 243.35 billion Korean won, or around 177 million US dollars. The shares are priced at 110,000 Korean won each, which is actually about a 15% discount from SM's recent market price. Now, you might ask, why the discount? It's pretty simple. Block deals usually involve a price cut to move large volumes of shares quickly and privately. Plus, these shares don't come with any management power. SM's majority shareholder is still Kakao, with over 40% control. This block deal will go through after hours on May 30th, and once it's done, HYBE will be completely out of SM. No more ownership, no more boardroom drama. Clean slate. So why is this happening now? Two reasons, I would say. SM stock price has rebounded recently, thanks in part to speculation that China may finally lift its long-standing ban on Korean entertainment, and Tencent is gearing up for that possibility. China has unofficially banned most Korean cultural content since 2017, following a political dispute over a US missile system. K-pop groups haven't performed in China for years, but now signs are pointing toward a thaw in relations. And that makes Korean entertainment companies like SM attractive targets again for Chinese investors like Tencent. So for HYBE, this was a perfect exit moment, we will say. They have recouped around 5.6 trillion Korean won from their total investments, slightly more than they originally spent, and they have exited cleanly with profit in hand. So now with HYBE out and Tencent in, SM's ownership structure is shifting again. Tencent Music will now be the second largest shareholder in SM, behind only Kakao. But unlike HYBE, Tencent isn't a direct competitor. They are a distributor. And SM has already said it looks forward to working more closely with Tencent Music moving forward. That could mean, several big things, like easier access to Chinese streaming platforms, that could be one, and potential concerts or events in China once the ban is completely lifted, and licensing, promotions, and maybe even new joint ventures with a Chinese company. SM artists like from aespa to NCT could benefit from Tencent's local presence in one of the biggest music markets in the world. So where does this leave HYBE? Financially, they're doing great. In Q1 2025, HYBE reported revenue up 38.7% year-on-year, operating profit increased by 50.3%, and net profit up 398%. They're running a tight ship, even aside, from BTS, other groups like 17, TXT, and IFN are delivering strong numbers, and their fan platform, Weverse, is still growing. With nearly 180 million USD in fresh cash from the SM sale, HYBE now has even more capital to spend on existing groups, launch new groups, expand globally, invest in tech and platforms, or potentially make new acquisitions. And so this isn't a retreat, it's a real allocation of focus. As HYBE said in their statement, this move is part of a choice and concentration strategy. So they're trimming non-core assets to double down on what really drives growth, which is what I appreciate as a shareholder of HYBE. Okay, so let's zoom out for a second though. Tencent now owns stakes in SM Entertainment with 9.4% shares, YG Entertainment with 4.3%, and Kakao Entertainment with 4.6% shares. It's quietly becoming one of the most influential players in K-pop, not by running labels, but by owning pieces of the biggest players. And meanwhile, Chinese rival NetEase Cloud Music just signed a copyright partnership with RBW, the company behind Mamamoo and OneUs. That tells us something. Chinese companies are preparing for a Korean Wave 2.0, maybe that's what they're thinking. And they want to be first in line when the floodgates open again. So to wrap it up, HYBE is out, Tencent is in, SM gets a powerful partner in China, and HYBE walks away with a solid return and fresh cash to fuel its next chapter. It's a win-win, and a major signal that the K-pop landscape, especially when it comes to China, is about to shift again. So we'll be keeping a close eye on how SM and Tencent collaborate, whether the China ban really lifts, and where HYBE decides to spend those cash, right? So thanks for watching. Now, if you have your own theories or information to add to contribute to this conversation, please leave your comments, and let's stay tuned, stay positive, stay respectful. All right? Peace and love. Bye-bye.